Good morning, traders from whichever side of the country world you're watching me from. Welcome to today's morning market call. My name is Ian Joseph, market analyst at HFM, and I would want us to familiarize ourselves with this disclaimer currently that you do have that states the information herein is only meant for educational and informative purposes. Only none of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but don't worry, I'm here to help you look at the markets the right way. I would want us to start by looking at the loyalty program that we have just launched recently, and this is our biggest program yet at the moment, where we traders have an opportunity to by looking at the loyalty program. Yes, indeed. And rewards while you trade. This is going to be the biggest promotion, up to $500,000 in cash prizes. There's going to be a supercar up for grabs. There's going to be an all-inclusive luxury vacations and high-end electronic devices. Join now by going over through the bonuses and promotion segment on our platform. I would want to talk about our upcoming events that we are currently going to resume. We do have physical classes at the Oval Building each and every day from Monday till Friday, and we are going to resume our pit stop tour. You have asked for it, and we are going to start with Kisumu, Kenya at the Selela Resort, which is going to be on 28th of January 2026. Then we shall be off to Kisii on 30th of January at the Dallas Premier Hotel. This is going to be from 11 a.m. till 2 p.m. And we are going to have Homa Bay starting us off February on 2nd of February at the Cold Springs Hotel. Quite interesting. Book your slots right now. We shall be with you in the near future. If you're not available for the physical sessions, we do have online webinars which usually repeat themselves quite frequently. The next one is going to be on 20th of January. Andrea is going to take us through volume trading, 7 strategies for gold, NASDAQ, and many more. I'm going to have my session tomorrow in the next 1 day, 8 hours. I'm counting currently at the moment. Now, switching gears, let's look at the charts. Where are we currently at the moment? What could potentially happen in the near future? We do have Netflix releasing their earnings today, where we do anticipate their earnings per share to come out at $2.54. Quite interesting, noting how the NASDAQ is going to behave as a result of this information. We do have Intel, Alcoa, Boeing releasing also their earnings before the month does end, but I would want to pay attention to the big giants, the tech giants essentially. We do have Microsoft, which will release their earnings in the next 8 days. Visa, Tesla also releasing their earnings on 28th of January, and the highlight is going to be Apple, which is going to release their earnings on the 29th, and we are going to conclude with AMD and the big tech giant being Nvidia, which is going to release their earnings next month. Quite interesting, noting how from now till end of next month, we are going to anticipate a lot of companies releasing their earnings, which is going to affect prices, and we will want to prepare ourselves before the markets do receive this information. Now, looking at what's happening currently at the moment, geopolitical tensions, the Greenland debate is still up, and it's gaining momentum each and every day. Now, the tariff that Mr. Trump wants to enact will be due and payable until such time as a deal is reached for the complete and total purchase of Greenland. The United States has been trying to do this transaction for over 150 years. Many presidents have tried, and for good reason, but Denmark has always refused, and Trump is not letting go of Greenland. We will want to look at what European Union did mention, and we want to look at Keir Starmer. He did post our position on Greenland is very clear. It is part of the Kingdom of Denmark, and its future is a matter of Greenlanders and the Danes. We have also made clear that Arctic security matters for the whole of NATO, and allies should all do more together to address the threat from Russia across different parts of the Arctic. Applying tariffs on allies for pursuing the collective security of NATO allies is completely wrong, as Keir Starmer did post, and I do quote, "We will of course, be pursuing this directly with the US administration. I do have an inquiry from Dave. Will the events on 28th, 30th, and 2nd be live on HFM platforms? We shall look into that. But for kindly join us there. It's going to be quite interesting. The Pip Stop tours this year is going to be really big in terms of us having our Pip Stop tours. We are going to ensure we go to all major towns in Kenya. Now, why is this information that you're looking at currently at the moment very important? Because this is going to affect what other countries are also doing. We did see a bit of tensions in international waters over the weekend, where we did see Russian ships, Chinese ships, they were escorting an oil tanker from Venezuela, which was captured around that particular region. And we want to see how could this push prices even more. Looking at gold prices, for those who have looked at the charts today, we have seen gold rally to the upside. And we're going to look at that information. Not only that, Mr. Trump is the highlight, and he has proposed a change to credit cards. And this is how it's going to affect the financial markets, especially people in the United States. Now, looking at this information, what they would want to do is the data from the Vanderbilt Policy Accelerator provides a stark look at the potential economic shifts. According to the analysis, a 10% cap could save American consumers up to $100 billion per year in interest payments. This is a big number when you consider the interest rates currently at the moment for credit cards in the United States is between 20 and 24%. Now, if the bill does happen to go into law, they are going to have a 10% cap on interest rates, which means that it would represent a significant win for household liquidity, creating a massive revenue hole for lenders currently at the moment. Why? Because this is going to eat into the profits of this banking sector. Now, furthermore, the report does suggest to offset these losses, bank will likely slash rewards program by an estimated $27 billion for CFOs, which creates a secondary strategic challenge, how to maintain customer loyalty and the top of wallet status when primary incentives, when you're looking at cashback, travel miles, and points are no longer economic viable. Now, we were looking at stocks in the United States, and we have seen a massive sell-off on stocks. We are going to look at the charts in just a few moments' time. Mr. Noban, thank you, brother. Nice to see you from the stream. Salute. I really do appreciate that. Now, switching gears to the economic calendar, we have just received employment numbers for the British pound. We will want to wait for the data to be updated. Currently at the moment, as you can see, it's still being updated, which is the perfect opportunity for me to talk about the Shield 500 account. We have an opportunity as traders too.
Mimi ni kijana wa Kimasai. Kama vile Mmasai anapotumia ngao kama ulinzi kwenye jamii yake, ndivyo hivyo HFM tunakuletea Shield 500. Hii inafanya vipi kazi? Wewe kama mteja mpya wa HFM unapofungua account leo na kuchagua Shield 500 kama account yako, mtaji wako wa kwanza usiozidi $500 utakaouweka kwenye account ile utakuwa insured endapo utapata hasara yoyote ndani ya siku 25 za kwanza 500. Hii inafanya vipi? HFM itarejesha ile hasara uliyoipata ili uzidi kutrade. Ofa hii inapatikana ndani ya siku 10 tu baada ya kufungua account. Fungua account leo, anza leo, mtaji wako umelindwa. HFM Shield 500. See you in the trading room.
Beautiful. You have an opportunity to open the Shield 500 account. Whatever money you do deposit between $10 and $500 within the first 10 days of registering. If you do incur any losses, we are going to back you up to $500 in terms of tradable bonus. I did have an inquiry from Arua. When are the online classes? So if you go over to the webinar segment on our platform, ensure if you're around Kenya, the server is reading KE, not SE, because it needs to be KE. The next session that I'm going to have online is going to be tomorrow at exactly 7 p.m. GMT +3. This is going to be East African time. And I'm going to develop a strategy with you guys, which is going to be based on market structure, trading techniques. It's going to be in the next 1 day, 8 hours and counting. Click on the register now and fill in your details. The moment you do the submit, an email will come, and at the time when the session should begin, which is 7 p.m. exactly, you do just click on join the meeting right now. It's going to take you to Zoom. It's usually offered on Zoom classes. Now, looking at the data, I do believe that if I can reload my page so that we can digest, as per the title of the video does suggest, today we are going to look at employment numbers for the British pound, and we want to see what's currently happening in the British region. Are we seeing employment move to the upper side? Are we seeing employment move to the downside? How is this affecting prices of GBP USD? I'm certain if you can, we are going to look at the charts in just a few seconds time. We are seeing quite an interesting amount of activities already on GBP against the USD. Now, currently, if I can pinpoint the data that has just been released. Okay, I seem to have misplaced the information. Okay, no worries about that. I will want to switch gears into the charts. Start by looking at GBP USD. We have received information. We have received data from, I do believe it's going to be the BLS. So Forex Factory, let me just pull up looking at GBP USD already did break to the downside. This was massive considering this is on the 15-minute time frame. So for today, we are going to do analysis on the 15-minute time frame. And let me look at the information that has just been released on Forex Factory. If we can go to the calendar, identify GBP, which was just a few seconds ago, which was climb out count change. Let me refresh my page. The data has not yet been released, which should be released currently at the moment. Okay, the data has come out negative. We were looking at a forecast of 15.6 thousand jobs being created, but the numbers, the climate, this is how many people lost jobs essentially. If I do click on this folder here, this is the change in the number of people claiming unemployment for the first time during the previous month. So 17,900 people did file for unemployment insurance last month, signaling that yes, indeed, more people lost jobs last month. But looking at the average earnings index, the 3 months to the end of the year did come out slightly better than anticipated at 4.7%. Now, if I do click on the full details, it's going to pull up the entire document that was released at that particular moment in time. Now, it is considered lagging data. Why? Because if someone loses a job today, it will take a bit of time for them to go broke. Now, this is the official document that was released at that particular moment in time. This is what is pushing the markets currently at the moment. Now, looking at GBP USD, the data has come out negative, and we are seeing the markets print out that information where GBP USD has currently moved to the downside. This is the labor market overview. So the body in charge is the Office of National Statistics. This is the body in charge of releasing this information to us, the public. Now, looking at the main points, estimated for payroll employees based on administrative data from HM Revenue and Custom, UK fell by 155,000 people. That's quite a huge number between November of 2024 and November of 2025, and decreased by 33,000, which is 0.1% between October of 2025 and November of 2025. Now, looking at the September to November 2025, the period comparable with the LFS, which is the labor force survey estimates, the number of payroll employees did fall by 135. Looking at the information, yes, we are looking at more people losing jobs in the United Kingdom, and as a result, this is going to affect prices of GBP USD. And we want to digest what's happening currently at the moment by pulling up the MetaTrader. Looking at GBP USD, prices did rally to the downside, test on the 50-period moving average at the initial onset of the release. If you can see how prices has been choppy ever since the news was released. This is on the 1-minute time frame where the data did come out negative. Prices reacted negatively to GBP USD, moved to the downside, but currently at the moment we are seeing a correction of that move. Now, we are looking at lagging data because this is employment data. The overall trend of the market currently at the moment, the British pound is considered a safe haven compared to the United States dollar. As a result of everything that's happening, geopolitical tensions, we have been seeing GBP USD move to the upper side. Yesterday, we did see it gap to the upper side quite aggressively. Looking at the weekly perspective, the trend could continue moving further to the upper side. I would want to consider looking at the highs that was formed just before London session did open. If we do close above this region, I will consider looking at more net long opportunities, potentially for prices hitting 1.34940 in the near future. Whereas on the other hand, if we do break and close below these lows, I will consider looking at shorting opportunities, potentially for prices coming back down to the gap that was formed during Monday morning, which was yesterday, where prices did gap to the downside, which is around this particular region. If I can point it out, around 1.33459. That's going to be for GBP USD. Looking at gold, let me have a clear chart. Let me remove my historical trading. Now, looking at gold on the 1 hour time frame, yesterday during Asian session, the start of the opening session during Asia, we did see prices gap to the upper side as a result of everything that happened over the weekend in terms of the tariffs and everything. But we did see markets consolidate for the entire of the day, because yesterday was Martin Luther King Memorial Day. Now, banks in the United States were closed, meaning there was low volatility in the markets. Now, looking at it currently at the moment, we did break to the upper side. We did break the highs that was formed yesterday at the start of Asian session, close well above that region, signaling that yes, indeed, gold is flying. It has made an all-time high. Currently, at the moment, as it stands, gold has never been around $4,715 an ounce ever since the beginning of time. Quite interesting. Now, looking at the information, if you do have a retest on this region, I will consider looking at more net long opportunities to the upper side, depending on new information that is going to be released to the market. What are we going to anticipate as a result of Greenland, as a result of New Zealand, Venezuela, sorry, as a result of European Union? What are they going to do as a result of the tariffs? Trump is threatening to tariff 8 European countries as a result of the Greenland situation currently at the moment as it stands. Now, we do have a question from Victor. GBP has created a choke. Should we expect going short? Now, we traders do react to prices. If you can go back to GBP USD, and these sessions are usually updated to our YouTube channel before midday. Usually, if you do happen to find it midway, you can always go revisit it on our YouTube channel. Now, looking at GBP USD, you have mentioned you have seen a choke where prices now did break the most recent highs that was forming. Currently, at the moment, the information that we are receiving right now, we are going to be looking more at fundamental news releases. The unemployment numbers, yes, did spike prices to the downside. But if you look at the overall scope of the markets, right now, the United States dollar is technically weaker because of everything that's happening. And you are going to look at stocks. If you look at an asset like US 500, this is the S&P 500. You can see the S&P 500 is losing aggressively currently as we speak. It is breaking the lows that was formed yesterday during New York session. Asian session has massively moved to the downside, signaling that yes, indeed, institutions, investors are offloading their positions on dollar-denominated assets, not only on the S&P 500. If you look at the Nasdaq also, the Nasdaq has not yet broken the lows compared to the S&P 500, but if at all we do follow suit on what's happening on the S&P 500, the Nasdaq could potentially break these lows. Now, currently at the moment, we do have earnings season. This could be very important for us as traders to also point out what is Netflix going to do today, because Netflix is part of the S&P 500. So whatever news that, if the earnings does come out positive, it's going to affect the Nasdaq in a positive way. But if the data does come out negative, it's going to affect the Nasdaq in a negative way. Going back to your question around the GBP USD, currently at the moment, we are seeing prices break the most recent highs. Now, the choke that you're looking at, I do believe you're looking, you did mean to say you're looking at more net long opportunities, considering prices at the moment did break the highs that was formed during Asian, this was New York session yesterday. Prices did open during Asia, formed a region of support, broke the highs that was formed yesterday, retested on that particular region for a further continuation to the upper side. Quite interesting, noting how this is going to play out as a result. At the moment, I'm looking at this region of resistance and I'm looking at this region of support. If at all price action does reach to that point, I would consider reacting accordingly. Remember, once again, we as traders, we do react to prices. Joro, thank you for the support. Wangai wants me to look at USDJPY. Hello, Wangai. Now, looking at the dollar against the Japanese yen, we did see the dollar lose value. If we look at the dollar index, to bring it into a clear picture, Look at the dollar index. This is on the 1 hour time frame. Ever since Monday did open yesterday, we did have a massive gap to the downside, signaling that yes, indeed, there is fear in the markets. And ever since, prices has been moving lower and lower and lower, signaling that yes, indeed, the dollar is facing some weakness currently at the moment in the market. I would want to be very cautious about the positions that I'm going to be taking that are going to affect the United States dollar. Looking at the USD JPY, the dollar against the yen, we did see prices move to the upper side slightly during Asian session today. We do have prices, the 200 in between price action and the 50 period moving average. I would want to keep a keen eye considering we had a massive bullish candlestick to the upper side. The USD JPY did close the gap that we did form yesterday during Asian Open. Currently, at the moment, trading well above that particular region, signaling that yes, indeed, the US dollar could be strong against the Japanese yen because the yen is anticipated to be weaker in the near future. We do anticipate Takaichi to dissolve government in the near future, where she is supposed to bring in a new parliament, a new house essentially, and this could affect prices in the sense that investors, institutions will want to take a cautionary stand. Whenever there's political instability in an economy, investors usually tend to park their money into safer havens, and that's what we are seeing on gold currently at the moment. Looking at gold prices, very bullish. When you look at silver prices trading around $94 an ounce, I would anticipate prices breaking these highs that was formed yesterday during New York session. If we do break and close above that region, I will consider looking at more net long opportunities on price action to the upper side. Considering it is London session, I am anticipating volatility as a result. But when you look at an asset like the Nikkei 225, if I can pinpoint where are you, darling? Here you are. Looking at the Nikkei 225, the Nikkei 225 is losing value aggressively, and this corresponds to the weakness that we are seeing in the Japanese yen currently at the moment. Prices did move to the downside yesterday, retested on that opening gap of the week. Prices did close almost exactly at the opening price of yesterday, but during Asian session today, we have seen prices aggressively move to the downside, signaling that yes, indeed, the Japanese yen is currently weaker at the moment. If you look at an asset like GJ, now GBP JPY could be an interesting asset to look at. Now, looking at the British pound, yes, the data has come out negative, but we are seeing the British pound gain against the Japanese yen. Why? Because the Japanese yen, overall, fundamentally speaking, is anticipated to be weaker in the near future. Now, the markets at the moment are at a key turning point. If you look at what oil prices are doing, when we switch gears to oil prices, now at the moment we are trading around $59 a barrel. Prices are retesting on the 200 period moving average currently at the moment. Now, with the uncertainties that we do anticipate, prices has been consolidating. If we do get new information in relation to Chevron, we do anticipate for them to have their earnings very soon. They do have quite a big deal that they are supposed to go into Venezuela, but we are going to see how that one will work out. Looking at OPEC, OPEC did cut supply of oil. We do have oversupply of oil currently at the moment. Hence, oil prices are not moving as aggressive as anticipated initially or as the metals were doing. Joro is asking a question: will silver hit 100K? Is that 100K dollars? Because currently we are well below $94 an ounce. Or are you talking about gold? Kindly clarify that. USD Canadian dollar, beautiful. Now, looking at Canadian dollar, you need to understand what moves your assets. If you're looking at a pair of USD card, the first thing we need to identify is which are the factors that drive these markets. Now, looking at the USD, the dollar, we can look at the dollar index currently at the moment and say that yes, we are anticipating weakness as a result. Now, when you're looking at the Canadian dollar is heavily tied to energy, especially oil prices. Whenever oil is doing good, the Canadian dollar usually performs better. Now, we have seen prices consolidate quite aggressively. Ever since 8th of January, prices has neither been making clear high highs, prices has neither making clear lower lows. We are about to have a crossover on the 200 and the 50 period moving average, signaling that yes, indeed, we have a change of character whereby prices was making higher highs, higher lows. But currently at the moment, we did have this region of support being broken, had a retracement onto that particular region. Prices are trading well below that region. That was once support, could potentially act as a resistance in the near future. I will consider looking at more shorting opportunities if the data does come out negative for the United States and does happen to come out positive in the near future for the Canadian dollar. We did have news releases yesterday for the Canadian dollar, inflation to be exact. We did have inflationary numbers that did come out for the Canadian dollar. If I can just wait for my chart to load. Indeed, we did have CPI numbers, which came out actually better than anticipated. Looking at the year-on-year release, which did come out around 2 point. Are you going to? Beautiful. This was the data that did come out yesterday during New York session, which was CPI numbers, the year-on-year release. Okay, did come out slightly lower than previous, but looking at the month-on-month release and the CPI itself, we did tick to the upper side, whereby the inflationary numbers did come out better than anticipated. And as a result, we did see USD Canadian dollar actually move to the downside. And I will consider looking at more shorting opportunities if we do have a crossover and signs of sellers into the markets. That's going to be it for me for the morning market call. I do believe we have digested stock markets in the United States. We have looked at massive selling on the S&P 500, on the NASDAQ, on the Dow Jones. We are seeing positions being offloaded aggressively. Look at Dow Jones Industrial Average, quite bearish currently at the moment, signaling that yes, indeed, whatever is happening as a result of Trump with the credit cards, with Venezuela, with Europe, with Greenland, everything, investors are now taking a cautionary stance into safer havens, where we are seeing gold prices move to the upper side. Gold is at all-time highs. Beautiful stuff. It's trading currently at 47.22, and we are seeing massive momentum coming in the markets currently as it does stand. I would anticipate that to continue moving on, but I would want to take a cautionary approach. The ceiling has been broken. We don't know where the next target could be. This is where psychological levels are very important. We have just broken 4,700. The next target could be a potential 4,750 in the near future. Toxic, thanks. Very important. This program is bright. I really do appreciate that. What you can do for me is you can like the channel, share as much as possible. This is the best 20 minutes of internet that you're ever going to get, that will potentially help you look for more opportunities in the near future. I would want to leave you by looking at the score and raw opportunity. Last year, we did give away a brand new Mercedes Benz. This year, we are going to give away a brand new BMW 2025 series, where we traders, Africa, it is our time. It is our time to grab the opportunities. Beautiful stuff. The score and draw challenge is currently ongoing. We have a brand new BMW 4 Series up for grabs, a UK Premier League trip for two. All expenses paid for, flights, accommodations, match tickets. 4 people are going to be gifted a 55-inch TV. 20 winners are going to be gifted official EPL jerseys of their own choice. And 60 lucky traders are going to be credited $200 onto their live accounts. We have a question from Joro. Is silver recommended for long-term bullish momentum? Everything does work, and this is what I believe. Everything does work. It just depends on you as a trader. Do you have the capability to hold on to positions? Now, currently at the moment, metals are a safe haven. This could be potentially a long-term investment, considering how silver did perform last year. If you can go to the daily perspective, look at what silver did do last year, and we are seeing the momentum spill off to this year. This was the first candlestick of the year last year. Till the end of 2025, we did see silver move 127% to the upper side, 127% and 27% to the upper side in 235 trading days. Looking at 2026, considering we are only 20 days into 2026, silver is already up 32% to the upper side. Whatever you do with that information is upon you. What is the psychological level on gold currently? Psychological level that we are looking up for next could be round numbers. So 47.20, 47.30, 47.40, 47.50. Provided it is a round number, you would want to look at it as a psychological level. That's going to be it for me. Stay safe, take care of yourselves. I shall see you when you do see me next. May the pips be with you. 20, 47.30.